This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
A very good afternoon, everyone. Live on Bloomberg TV, radio, streaming on YouTube and Bloomberg Originals. I'm Emily Grafeo. Alongside Isabel Lee, we are in for Carol Massar and Tim Stenivek, and it's on a day when stocks are climbing and a U.S.-Iran deal spurs an oil retreat. This coming after the conclusion of the Fed meeting on Wednesday, which saw traders pricing in a rate hike later this year. We're going to talk all that and more, but first, Isabel, how are you?
I'm doing all right, hanging in there. I mean, it's a holiday shortened week, Emily, but a lot has happened. We had the first Fed meeting of Fed Chair Kevin Warsh. BOE held rate steady. Knicks, if you're a Knicks fan. And then there's still the aftermath of the SpaceX IPO and just a relentless headline surrounding Iran. But we will break that all down in this show.
And I attempted to wear Knicks blue, but I think I'm a little too dark. I was also wearing Knicks blue yesterday and also on Monday, so we're slowly getting through the Knicks blue wardrobe. We're going to talk about all of that and more. Here's a setup at this hour on this Thursday, June 18th, 2026. We're going nuclear, and we're going to speak with Liz Muller, co-founder and CEO of Deep Fission. It's an advanced nuclear energy company that went public today, Isabel.
And we're going to have a chat with Sherry Paul. She's Managing Director and Private Wealth Advisor at Morgan Stanley Private Wealth Management. She has over 20 years of portfolio management experience. And a little tease there, Emily. She says we're in the midst of a generational economic shift toward women.
And it's not a Knicks win week without talking about Bloomberg sports business, and we can't do that with anyone better than Randall Williams. We'll have him on to talk about the Knicks parade, and we're also going to be talking about the World Cup with him.
But first up, a check on today's trade and top business stories with Charlie Pellet.
All right, thank you very much. Certainly blue and orange, the colors here in New York, New York. Color I'm focusing on right now, green. Right now, the Dow, the S&P, NASDAQ, they're all advancing. Stocks pushing higher. Wall Street staging a comeback after yesterday's rout. Right to the numbers here because it all has to do with crude. Crude oil lower, S&P up 78 now, up by about 1.1%. Dow Industrials up 152, up 0.3%. Tech is where the action is, specifically semiconductors. NASDAQ up 1.6%. The NASDAQ 100 index up by 2.4%. And the SOX, that is the Philadelphia Stock Exchange's semiconductor index, it is surging by 6.5%. Intel up now by 10%. We've got the VIX below 17, a 10-year at 4.43%, and the 2-year 4.15%. Gold down 0.7%, 42.28 the ounce, while West Texas Intermediate crude down 1.6%, WTI 75.63 a barrel of Brent 78.58. Brent crude down by 1.2%. As we are seeing oil declining, we're also looking at oil majors moving lower. ExxonMobil down 2.6%, Chevron down 2.7%, ConocoPhillips now down by 3.3%. SpaceX bankers are preparing for a bond sale of at least $20 billion, and SpaceX is extending its two-day drop a week after the largest ever IPO. SpaceX right now down by 6.7%. Programming note, holiday for a lot of people tomorrow, Juneteenth, but we are here covering global markets at Bloomberg. Join us for a special edition of Surveillance from 9 a.m. to 12 noon with Tom Keene and Paul Sweeney. I'm Charlie Pellet. Emily and Isabel, that is a Bloomberg Business Flash.
Thank you, Charlie. Well, Federal Reserve Chairman Kevin Warsh this week vowed to restore price stability after officials left rates unchanged and signaled growing support for interest rate hikes. Two-year Treasury yields are steadying today, but yesterday they were up 13 basis points. It was the biggest jump since April 2025 when we saw a front-end move that large, and it matched the largest increase on a Fed meeting day since 2008. So a lot of superlatives to discuss here. For more on the Fed, we're joined by Michael Mckee, Bloomberg TV and Radio international economics and policy correspondent. Mike, you were in the room with Kevin Warsh. It was the first press conference with the new Fed chair. Was the vibe different than the Powell pressers?
Not particularly. I mean, Kevin Warsh is a completely different personality than Jay Powell, but everybody else in the room, all the reporters and all the Fed staff were the same. And so it didn't feel all that much different, except when Kevin was talking. He basically followed sort of the same script where he read the statement. Now he had to read a lot less because they shortened the statement, and then he announced his 5 task forces. But then the question and answer period went about the same, and he doesn't want to talk as much, and he doesn't want to give as much forward guidance as Jay Powell, and it's hard to exactly slice what forward guidance is, so I think he was a little more restrained than he could be in other circumstances, but for right now, what you see is what you get.
What was your biggest takeaway? Was this a meaningful shift from the Fed's message? Do you think that he was able to establish the credibility that a lot of people were actually worried about coming into this meeting?
Well, he probably went a long way, and I think the markets were surprised by this. I wasn't surprised. I've known Kevin for a long time, and this was the Kevin Warsh I've always known, a very hawkish on inflation, somebody who believes that price stability is the foundation for everything else that goes on in the economy. So I don't know exactly what he told Donald Trump and why Donald Trump thought he might be immediately able to lower interest rates. But Kevin basically adopted the position of a growing number of people on the Fed that inflation is a problem. It's broadening out beyond just energy, especially in services prices. And so there is a concern that even without Kevin Warsh, they might have been moving in this direction. And now that he's signed on to that, I think the markets are right to anticipate that if we continue to see these kinds of moves, that they are going to look at raising rates. It kind of moves in inflation.
You mentioned the task forces. Can you just talk about how unprecedented that is, if it is, for a Federal Reserve to have something like this? And what kind of clarity do we have on exactly how many people are going to be on each task force? What is it actually going to look like in practice?
Well, the second part of the question is easy to answer because we don't have any idea. He said he's going to have internal people and external people and the best people. And that sounds kind of like a president coming into office saying, I'm going to have the best people in terms of my cabinet. We'll find out more as time goes on. It's not unprecedented for the Fed to do this. It's unprecedented to do it kind of as at the beginning of a Fed chairmanship and to announce 5 different task forces, but they've had task forces for quite some time. Every Fed chair goes through a period where they look at communications, and now they have a regular every 5-year look at the basic framework of how they make monetary policy. Just finished that last year, so that included the balance sheet. So some of this work may be duplicative, and they've had task forces for other things that they want to look at, other issues that they want to look at. So it's not unprecedented, and it isn't clear what it all will produce. Some of it will probably be to make people on the Fed feel they're included in the changes that Warsh wants to make and maybe give him a chance to convince people of some of the changes he wants to make. Others are a little more ephemeral. AI, I'm not sure that you can reach a conclusion on that. Right. You could have a lot of opinions. And then he wants to do one on the government statistics gathering for the economy. The Fed does a little bit of that, but that's mostly other government agencies. And they've struggled because their budgets have been cut. Maybe the Fed can print them some more money down in the basement or something like that and help them out. But otherwise, I'm not sure exactly where that goes either.
Mike Mckee, the man in the room, thank you for that fantastic insight. Mike Mckee, Bloomberg TV and Radio international economics and policy correspondent. Thank you for joining us. Let's now bring in our next guest, Sherry Paul. She is Morgan Stanley Private Wealth Management Managing Director. We're so pleased that you're able to join us in studio in person. It's always a treat. Thank you. So let's stick with the Fed. The messaging marked a new era. Everyone is saying that this is a hawkish tilt. Even the dot plot was hawkish. What do you make of this after decades of doing this? Do you think it's going to be good for the markets?
Well, thank you for having me. It's a great question. I'm going to separate it out because there's sort of the policy discussion about what this means at the institutional level and how the Fed defines itself and its independence. But as a portfolio manager, really all I care about is what does it mean for client portfolios and where would we be investing if differently. And the bottom line is that at Morgan Stanley, we think that we don't see any rate hikes or cuts for the rest of the year. So investors should be continuing to tilt on the short to lower intermediate part of the bond curve and be as liquid as possible in order to flex to change. It's interesting, though, to see how important language continues to be important. And having worked with Powell through COVID, he loved to pillow talk the market, before he actually took any action. And so we're going to see whether or not we get a little bit more of a direct call with this new Fed chair. But for now, we're not changing portfolios, and we think we're right where we should be for investors.
There was so much talk about, a lack of forward guidance going forward. Yeah. As someone in the markets, what do you think is going to fill that void? Are you going to be looking at some new signal to try and determine the path forward for monetary policy? It's
a great question. The initial answer I have is capitalism is going to drive that conversation naturally. And right now we're in a moment of what I'm calling candlesticks to light bulbs and transformation, innovation occurring at a pace that we've never seen. And having managed client portfolios and client identities through the first wave of the internet back in the late 90s, that's going to make the internet look like the fax machine, the pace of change here. And so it's important, I think, for investors, I'm talking about not individual investors, not to overthink to the point of paralysis. That's the greatest risk to return sets right now. And so as a goals-based, planning-based portfolio manager, our responsibility is to consistently make those decisions. And capitalism is going to drive that. So, for example, $1 trillion of expected AI spending through 2028. You just have to follow the money to know where to go, and that puts us in hardware and infrastructure and things like that. A little bit of a long answer, but that's where we are.
No, this is exactly where we want to go, because we want to go to your clients' portfolios, and I'm sure all of them are talking about AI. And in the notes you sent us, you said investors are willing to pay for what you call the AI innovation premium, but you're now talking about an AI installation premium. Talk to us about the difference.
Well, thank you for bringing that up. It's something that we've coined, my business partner Jacqueline and I, to explain to clients why we're paying the premium against PE ratios. And Jacqueline and I were very early to the AI investing trade over almost 4 years ago. And at the time, we were conveying this concept of what I was calling return on innovation, that something was happening with AI so rapidly that we would get this green shoot spike, which is what we've seen in the chips and cybersecurity. Now, what we're pivoting away from the return on innovation to looking at the premium for return on installation, because the moment that we're in right now is that, and this is really important, is that every company is now a tech company, whether they realize it or not. And those that don't will face corporate extinction, in my opinion, and those that do will move forward. And so the installation puts us back in that hardware, into cloud and into infrastructure, and we've shifted our investments, more towards those sort of hard assets.
Is that all on the equity side? Because I read about credit, and there is this discussion about if you really believe in the promise of artificial intelligence and you're a multi-asset investor, you should avoid the debt and just go all in on the equity, because that's where you're going to get actually an upsized return if you're actually bullish on this.
Well, now you're really speaking to something really important, which is transparency and liquidity, right? So the private debt market lacking in transparency, and then correlations, right? So what we're experiencing now is this correlation, the correlations in the stock market, both at a global geography, and even at a market cap, are like 98% correlated. So you're not getting that constructive yin-yang in a portfolio that is so crucial to diversification. Now, the challenge set for private credit is liquidity and transparency. And in moments of change, I think that you really want both. For the clients that we work with in the ultra high net worth space, we want them to be liquid and dynamic in that way. So I think that there's a duality there.
Okay. Zooming out more, you talk about a narrowing group of winners and losers in the market. So if you're winning, of course, everything is great. But then it also sounds like concentration is a risk. How concerned are you about that? The fact that the winners are dependently a relatively small group and is shrinking even smaller as we
Yeah.
speak.
Well, you're touching on something I think that's pretty historic that doesn't get spotlighted enough, which is this consolidation and concentration and mutation. I'm going to call it a mutation of the S&P 500. Okay, this is why sector-based investing now is so crucial, and so are thematics, because the trade's crowded. 40% of the market cap is in 7 and 8 companies. So what investors need to do is stop arguing with that. Stop arguing. That's the way it is. And so as investors, what we need to do is figure out how to mitigate the risk in concentration. And from where I sit, the antidote to that is idea diversification. Your portfolio should be set across a set of ideas with different maturity rates. And if we're doing that, which is why our portfolios are still so US centric, and overweighting and underweighting within your sectors, and then within at the company level, then you should be able to mitigate some of that, but not necessarily the volatility, but the risk that you're taking is higher. So therefore the return set should be higher as well. There has to be an understanding and acceptance around that, because that's the way it is right now. And we're getting more and more concentrated.
What are some of those ideas? Can you give us examples?
Well, like right now, from a thematic standpoint, obviously AI infrastructure build out. I think it happens at a more rapid pace. We talk to clients a lot about neuroplasticity, frankly, and how the brain is it's the biggest impediment to accepting change and capitalizing on change. Okay. So we can't think our way through this. We certainly can't feel our way through it, right?
Wait, so what do we do if we can't think our way and feel our way?
Yeah, so thinking's different than analyzing. That we have to start to distinguish the activity of the mind. So if we start to analyze and create a productive set of outcomes, then the broad-based themes are obviously the acceleration in healthcare and epigenetics, and how AI will lead to incredible vaccine breakthroughs. So investing in biotech and healthcare would be a great place to be. The convergence event that I want to point out that's really happening, though, is that the new modern military, we're deglobalizing. That's inflationary, less efficient, more conflict. So we're seeing modern military build out at the same time that corporations are trying to develop AI in a way that is cost reductive and productivity enhancing. And when you put those things together, those two constituencies are all competing for the same infrastructure. That's why we see chips exploding as a side note.
We can't let you go without asking you about what you wrote in your note, the generational shift for wealth towards women. If that's true, Emily and I will be so happy, number one. And number two, how should the financial industry be changing today? And are they taking concrete, actionable steps to address that?
Yeah, I appreciate you bringing that in, because we're calling it sort of the tale of two transformations. We're in the middle of this AI industrial revolution, but something seismic is happening here in the largest capitalist democracy, which is we have an asset transfer of almost 124 trillion, 50 trillion of that coming into the hands of women, which will make women the dominant stewards of wealth in the United States. And at a financial institution level, what I find ironic is that women want that collaborative, leadership-driven conversation. They don't need to be more financially literate. They are as financially literate as everyone else. And what they are, though, is they're incredible decision makers in selecting talent. They're picking out, school teachers. They're picking out financial advisors, and really what they need to do is just be great at making decisions around selecting people. But this will be transformative to the U.S. economy. It's really not being talked about enough, and I think it actually will have more dramatic impact on the economy than potentially even AI, because we know it's happening.
Something to talk about next time. We'll have to have you back on. Sherry Paul, Managing Director and Private Wealth Advisor, Morgan Stanley Private Wealth Management. Thank you for joining us. Coming up next, Liz Muller, co-founder and CEO of Deep Fission. We're talking about that nuclear company that went public today. Just taking a look at markets as well. S&P 500 up about 1%. Tech stocks taking the lead, though. That NASDAQ 100 up 2.4% right now. This is Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Oil is sinking. Stocks are gaining. The Dow, the S&P, NASDAQ solidly in the green right now. Holiday shortened trading week. S&P right now up 76 to 74.96. That is a gain of 1%. Stocks are climbing after a peace deal between the U.S. and Iran spurs optimism that a revival of the Strait of Hormuz will ease inflation risks. The Dow is up 0.3%. NASDAQ up 1.6%. Tech shares, specifically semis, are rallying. NASDAQ 100 index up 2.4%, and the SOX, the Philadelphia Stock Exchange's Semiconductor index, up now by 6.5%. We've got the 10-year yielding 4.43% against the backdrop of a VIX below 17. The 2-year 4.15%. Spot gold down 0.7%, 42.28 the ounce, while West Texas Intermediate crude 76.19 a barrel. WTI down 0.8%. Barrel of Brent 79.27. Brent crude down by 0.4%. Amazon is in talks to sell its custom-made AI chips for use in other companies' data centers, a key expansion of its efforts to cut into NVIDIA's dominance. Amazon shares, they're advancing now by just about 2.4%. NVIDIA, again, part of a broader tech rally. We've got NVIDIA up by 2.7%. Recapping, Dow Industrials up 0.3%, S&P up 1.1%, and West Texas Intermediate crude down 0.7, 76.24 a barrel. A programming note, tomorrow is a holiday for a lot of us, but Bloomberg Radio and Television are here to cover global markets. Join us for a special edition of Surveillance between 9 a.m. and noon tomorrow with Tom Keene and Paul Sweeney. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. Well, we can't talk about artificial intelligence without talking about the energy that you need to power the AI build-out, Isabel. Growing electricity demand from AI and data centers is prompting a global need for different forms of energy. One company seeking to meet that need is Deep Fission. It's an advanced nuclear energy company developing small, modular, pressurized water reactors installed 1 mile underground. We're going to learn what all of this means. The company began trading on the NASDAQ today, priced at $16 per share under the ticker FISN. Pleased to say we're now joined by Liz Muller, co-founder and CEO of Deep Fission. She joins us from our San Francisco bureau. We're also joined by Will Wade, Bloomberg News energy reporter, here with us back in New York. But Liz, let's start with you. Just give us the elevator pitch for Deep Fission. What is the company and why did you guys go public now?
Yeah, Deep Fission, as you noted, is a different deployment model using currently available advanced reactor technology. So pressurized water reactors are the most common type of nuclear reactor we have today. But when you deploy it in a borehole 1 mile underground, you can deploy it much faster. You don't have all the construction that you would have for a conventional above-ground nuclear reactor. And so you can build it faster and at a significantly lower cost.
So for viewers just hearing about this, what problem does putting reactors 1 mile underground actually solve in nuclear deployment today?
Yeah, it's really two issues. The first one is nuclear has historically been too expensive. There's just too much construction, too many parts that need to get built. When you build it underground, you're able to take advantage of the rock that already exists. You're able to take advantage of a column of water above you in the borehole that is creating pressure through the force of gravity. And so you don't need big, expensive pressurizers. And so the result is we're much lower cost and we're much faster in order to build.
So, Liz, what I kind of like about your company is that it's taking existing technologies that we already have. We know how to dig holes, we know how to build reactors, and it puts them together in a way that nobody's done before. You haven't done it before either, of course. It's still new. We're waiting to see it happen. But can you talk a little bit more about how that can save money?
Yeah, so you're exactly right. This is using proven technology that already exists. So pressurized water reactor technology and standard commercially available fuel, but combining that with deep borehole drilling, which is also something that is commercially available and we know how to do. And when you combine those two, that's where you get something really special and a different deployment model. Nuclear is already very safe above ground, but when you put it in a reactor 1 mile below ground, the safety profile is extraordinary. And that means that you can take out a lot of the cost as well as a lot of the time to build.
It's an interesting idea. What sort of reaction have you had since you came up with this idea? Because I feel like it can go two ways. You can get people saying, oh my God, that's crazy. I've never heard of anything like this. Or you can get people saying, oh my God, I've never heard of anything like this. What a brilliant idea.
Yeah, I think we get both. So
Okay.
I think it does start off with a little bit of disbelief. Why are we the only reactor company that is taking this approach and doing something so different, which is building a mile underground? But then the more people start to understand what we're doing and that we're using existing proven technologies, the more people start to appreciate the benefits of being surrounded by billions of tons of rock so that nothing can get out of the borehole. Having that column of water that is a mile long above you in the borehole that is creating the pressure on your reactor, but it's also your emergency core cooling system. And when you're a mile underground, there's nowhere for that water to go. And so the safety profile, I think, also grows on people as they start to appreciate the differences and the benefits of building a reactor a mile underground.
So, Liz, nuclear projects are known for delays and cost overruns. Why does going underground make execution easier rather than more complicated, in your view?
Yeah, I'll give you an example of the containment structure. So typically for above ground nuclear power, you require a containment structure to make sure that nothing gets out into the environment. And that can take years to construct. And because it's all quality maintained, there's maintenance required, you need to make sure there's no degradation. And so that can be where you can have significant cost overruns and delays in schedule. But when we're doing it, we're drilling for that equivalent containment underground. And that drilling time, you measure it in weeks, not years. And so it's really a much, much faster build time to get something like the containment dome. And then it's similar for other parts of the reactor.
Liz, give us a sense of scale so far. How many reactors do you have? What regions in the country are they currently deployed in? And then plans for maybe future projects?
Yeah, so we are building our first reactor right now in Parsons, Kansas, and we're able to participate in the Department of Energy Reactor Pilot Program, which is allowing us to build a reactor faster than we otherwise would have been able to do. Now, importantly, as part of this program, we are actually deploying a first commercial reactor. So it is a test reactor under the Department of Energy program, but our intent is once we've built it, to then use it for the commercial generation of electricity. And we are targeting late 2027 or early 2028 for that first deployment and putting electricity onto the grid.
2027, 2028 for a new commercial nuclear power plant. That's just really fast. I'm amazed to hear you say that. There's so many other companies that are working and they don't have schedules anywhere near that fast. How can you do this faster than they can do it?
Yeah, again, this is when we're able to leverage technology that has already been proven and that is well understood and is even commercially available. So we don't need to build a manufacturing facility or a fuel fabrication facility. We're able to go straight to building the reactor itself using dozens of commercial vendors who can build to our specifications. So that means that we can deploy within these timeframes. Again, it's proven technology, and we're just able to change the deployment model so that we can get it built faster.
Can we talk a little bit about the market reaction that you've had? I know you were trying to get this IPO out the door a few weeks ago, and that was aiming for about $150 million at a $24 to $26 valuation. Today we saw that it was actually closer to $40 million, and the pricing was closer to 16, and today it's even down just a little bit. So what does that say about how the world sees you?
Yeah, I mean, what I think is we priced this IPO to give most possible investor confidence. And we are going to be able to reach that next milestone. Our big milestone is the commercial borehole proof of concept, which we are looking to do this fall. And that's a significant milestone because we are going to be proving out that we can build the borehole to our specifications, that we can emplace a non-nuclear reactor in that borehole, that we can get the sensors down there, and that we can start to measure the heat generation and all of these things that are new when it's in a different environment. So even though we're using the proven technology, the deployment model is something that we can prove out. And the 40 million that we're raising now is enough compared to combined with the 60 million that we raised previously to reach this next milestone.
Liz, how dependent is your story on the surging demand for AI and data centers when it comes to the future growth of your company?
Yeah, we're definitely seeing demand from data centers and for AI. So we've got 15 gigawatts of LOIs for deep fission reactors. That's very strong demand. I would say that probably more than half of that is from data center developer companies. So these are the groups that are building data centers, they need electricity, and they understand that deep fission has an advantage when it comes to time to market. So our ability to meet that demand and do it quickly, we're talking about 2028, 2029 timeframe, is much more attractive than having to wait into the 2030s, at which point, the demand is there now and the need to build is now.
What kind of public response have you had to the idea? What are people saying about the idea of a nuclear power plant buried in their neighborhood?
Yeah, I think initially people are a little bit surprised. This is very different from all of the other advanced reactor companies that are out there. And so the first response is, well, why are you doing it a mile underground? But the more we expand on the technology, the more we explain that this is proven technology that we are just deploying differently, I think people start to get really excited about our ability to get this done and to get it done quickly.
Liz, before we let you go, I'm curious if we could zoom out a little bit. When you think about the future of energy in the United States, let's say 5-10 years from now, what % of the total country's energy use do you think is coming from nuclear?
Well, it's about 20% now, and I think that's going to at least hold and potentially increase. What we're seeing right now, which is really remarkable, is that we need all the electricity that we can get. And so while a few years ago, people were talking more about energy transition, and there are clean energy benefits from transitioning from dirtier types of electricity to nuclear, but what we have right now is we just need to build. We need to make sure that we remain the leaders when it comes to not just AI, but also the production of energy, and nuclear can help us get there.
Liz Muller, co-founder and CEO of Deep Fission, thank you so much for joining us. And thank you as well to Will Wade, Bloomberg new energy reporter here with us in New York. He knows everything energy and nuclear, so we thank him. Isabel, we're about 1.5 hours left in this trading day on a holiday shortened week here, where the S&P 500 is up about 1% now, holding on to gains post Fed Day.
Yes, and you're seeing a gauge of chip makers hitting record highs. Intel soaring. We haven't talked about Intel, Emily. We have President Trump saying the firm will work alongside Apple to design and produce semiconductors domestically. So you see the stock popping there. Bonds are gaining after a rout. Oil slid to $75. Remember when it was $100 per barrel?
Yeah, not too long ago. When we come back, Randall Williams, who has some boots on the ground reporting from the Knicks parade. This is Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all advancing right now. We've got just 1 hour, 20 minutes to go ahead of the closing bell till we wrap up trading on a holiday-shortened trading week. S&P now at 74.91, higher by 1%. Wall Street staging a comeback. Stocks are climbing after a peace deal between the U.S. and Iran. Crude oil moving lower. Right now, the Dow up 130. That is a gain of 0.2%. NASDAQ Composite Index is surging 393, up 1.5%. The NASDAQ 100 Index up 2.3% as Intel surges almost 11%. The Russell 2000 Index of small cap shares is up 1.6%. The SOX, the Philadelphia Stock Exchange's Semiconductor Stock Index, up 6.3%. All of this with the VIX just below 17. The 10-year at 4.44%, with a 2-year 4.16%. Gold down $35 the ounce, down 0.8%, while West Texas Intermediate crude oil flat on the day now, $76.78 a barrel. Brent crude $79.67. Brent has turned higher. Little change, but higher by 0.1%. Sources tell Bloomberg bankers for Elon Musk's SpaceX are preparing to hold calls with investors as soon as next week to discuss a potential bond offering on the heels of the company's record IPO. Shares of SpaceX are down for a second day. SpaceX lower now by 6.2%. Programming note, tomorrow, yes, holiday for a lot of people, Juneteenth, but Bloomberg will be here covering global markets. Join us for a special edition of Surveillance, 9 a.m. to noon tomorrow morning. Tom Keene, Paul Sweeney, they've got you covered. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie. You're joining Bloomberg Business Week. This is Isabel Lee alongside Emily Griffeo, filling in for the Carol Master and the Tim Stenovic. But I think we're holding up pretty well, Emily. So it's Friday for us, even if it's Thursday. Markets have been relatively calm, I would say, compared to the past days. Should we talk about crypto? Because I just pulled up CRYP Go and it's down. All of them, right on the screen.
It's been a rough go for Bitcoin. That it just hasn't been able to hold on as a risk asset. But there's some exciting news, Isabel, in New York City.
Really?
Today.
What is that, Emily?
I don't know if you've seen social media.
I have.
But I've seen a lot of traffic. People getting stuck in the subway.
Yes.
But all for a good cause.
Yeah, I guess. I'm just not a sports person, but you know who's a sports person?
Randall Williams is a sports person. He's Bloomberg News senior reporter and co-host of the Business of Sports podcast. He was on the ground at the Knicks parade today.
I was.
How did you even make it back, Randall?
And what time were you there?
How did I make it back? That's an interesting story. So after Jalen Brunson was done speaking, I walked somewhere, found a city bike, and then biked all the way to Union Square, and then took the 405 back here. But that was quite the journey, as you can imagine.
What was the energy like? Like, was it really electric, palpable, or were people a little more annoyed because of the waiting? Like, I was monitoring Twitter or X, and NYPD, for instance, was saying that no one can enter and no one can leave.
Of course, there's going to be some people who are upset about NYPD shutting down different blocks. But this was a basketball party unlike anything that I've ever seen. You could hear the screams and shouts and celebrations from blocks and blocks on end. And as the Knicks got closer and closer to City Hall, they got louder and louder, and confetti poured onto the street. And so everyone is happy. You're talking about a 53-year drought from New York and the Knicks that was recently broken. And so I think the Knicks can live with the annoyance and the people who aren't particularly happy with them winning.
And you were at some of the finals games.
I was.
Right?
I went to 3 of the 5.
Oh, wow. What was the vibe?
Well, in game 1, I think the Knicks sort of took everyone by surprise, and the same thing in game 2. I think a lot of times the away team, as the Knicks were when they traveled to San Antonio for the first 2 games, they're expected to come away with 1. That's their goal. And when they won both, it was like, oh, the city's about to explode. And surely enough, President Trump came to game 3, and some might say he caused a little bit of bad luck for the Knicks. In game 3, they lost that one, but in game 4, that was the loudest arena that I have ever been in by far. We saw a 29-point comeback, and one of a memory that I think Knicks fans will remember forever with the OG Anunoby tip-in shot that put them up 3-1, and then they closed out the series in San Antonio the following on Saturday, so whenever that day was.
Yeah, that final game, it just felt like I was in disbelief. I didn't really truly believe that we were going to win until the very end. Maybe that makes me,
You're blushing.
Wow,
a pessimistic fan.
Emily said we.
I know.
What is the future for the Knicks here? Because, I mean, they're obviously in the spotlight, high profile. You can imagine that probably the economics would bode well for them. Or when are we going to see Jim and what kind?
I think the players in particular are the biggest winners of this. If from the ownership perspective, the best case scenario for James Dolan, of course, was bringing home a championship. That was his end goal. However, it would have been better if they closed out the series in the Garden, because that's one more extra game and more revenue. But he'll take a championship ring all day after not being able to deliver one for so long. On the player side, they're going to see endorsements like never before. You're going to see players from the 12th, 11th, 13th, 14th man on the bench who might be able to sign $50,000, $75,000 endorsements that weren't on the table before, simply because they're in the biggest media market and are playing for one of the biggest brands in basketball.
We have to get to the World Cup as well. From one major sports event to the next. You have a new video out, and I found it really interesting.
Sports City.
Yes, Sports City. It's about how the actual cities that host the World Cup, they don't collect the ticket revenue.
Correct.
But they still have to spend potentially billions to actually host the World Cup in their cities. Tell us about that.
Combined, yes, all of the cities. You think about the ownerships around these NFL teams in particular that are hosting these matches. A lot of them spend a lot of money renovating their stadiums, and then you think about the ticketing. FIFA takes all of that. So a lot of FIFA negotiated individually instead of collectively with these teams and organizations to license the stadiums essentially. And from that perspective, the teams then have to strip their name, image, and likeness from it. You think about Gillette Stadium, that's called Boston Stadium now. MetLife Stadium, New York, New Jersey Stadium. And FIFA is going to extreme lengths. There was a photo that went viral earlier this week of tape on Gillette Stadium that said Gillette on the back of a seat. So they're taking it very seriously for not just themselves, but for their sponsors as well. They don't want alternative sponsors that are in the building. They want their partners to reap the benefits of an event that happens every 4 years.
Here in New York State, are we ready to host this event with the infrastructure and everything? Because it's going to be in New Jersey.
In my experience, I took the New Jersey Transit twice, earlier this week and then last week as well on Saturday, I believe. And going there was great. It was fun. I got there early. To get to the game, it was fun. I didn't run into any issues. But leaving, it was a completely different story.
Why?
Now, I think Saturday was because of the fact that there was a Knicks game and the Knicks had the potential to close out the series. So NYPD, I believe, shut down specific areas around the Garden, which of course is right next to Penn Station. And then coming back earlier this week, it wasn't as bad, but it still is sort of like a concert. And if you've been to a concert at MetLife Stadium, you know what it's like to leave. It's just parking, it's running into people, it's long lines. And so I think they're doing a good job so far, but this is early on in the World Cup. We're not even into the round of 16 or the quarterfinals or the semifinals. So when those rushes get to New York, then we'll find out if New York's infrastructure can hold. Okay,
30 seconds. Give us a preview of what we should watch in the week ahead in the World Cup.
For maybe those
what we should watch in the week ahead in the World Cup. Well, Portugal, they had a tie that was not very good. Cristiano Ronaldo did not play well. So let's see if Portugal can, I believe they play on Tuesday next week. Let's see if they can strike revenge and play with a little bit more fierceness.
All right, we'll be watching.
Yeah, because Randall said so.
Exactly.
Thank you all.
Randall Williams, Bloomberg News senior reporter and co-host of the Business of Sports podcast. Thank you for joining us. Thank you for getting back safely from that Knicks parade. Again, a lot of confetti kind of touching the streets of New York City on this historic moment here.
And again, we've established we're not sports fans, but what I like about the World Cup is it brings a lot of people together. Like my husband was watching. You see some people here watching. I mean, it's just fun. It's like all countries. I saw Ghana watching, and I texted my friend Richard Abbey. I was like, I'm watching your country. It's just, I think sports really has the power to unite people.
Yes, it's certainly a unifying event here, and it's great to have that Business of Sports reporting at Bloomberg to follow it all. Let's just take a quick look at markets here as we close out this hour. It's been so fun here with Isabel Lee. S&P 500 higher, up about 1%. Tech stocks leading. Crypto can't catch a break. Bitcoin down about 3%. And yields not doing much.
And oil around $76 per barrel.
A lot. When we come back, stocks on the move. This is Bloomberg Businessweek Daily.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, we are wrapping up this hour of Bloomberg Businessweek Daily. Isabel, it has been such a pleasure here on a day when tech stocks are rallying, the bond market's fairly quiet. The bond traders tend to wrap it up before a holiday and they go home.
Really?
Yeah.
I want to be a bond trader.
Yeah, they live a life of leisure, but also pessimism, of course. The fixed income trader is always more pessimistic when you have a lot to lose.
That is true. I mean, you're looking at a NASDAQ that's almost up by 2%. So to your point, tech stocks are rallying. I think it's really the chip stocks. We're seeing a gauge of chip stocks really in the green. But maybe now we can take a look at individual equity movers. And for that, we have Denita Tekova, cross-asset reporter with Bloomberg News. So, Denny, as I like to call her, we sit together. What are you looking at?
SpaceX. It's been the week of SpaceX, but it's ending not in quite the way we were expecting. It turns out a multi-trillion-dollar company is similar to a multi-billion one. It's very volatile in the week of the IPO.
Up and down.
And it fell 5% on Wednesday, and it fell as much as 10% in earlier trading today. Now it's about 6%. The ticker we've been talking about, of course, is SPSX. It's been a volatile day in the stock market, but it's been a very interesting day in the bond market. Emily, bankers for SpaceX are preparing to hold investor calls, and the number we're getting is raising at least $20 billion potential bond offering. It's going to be an investment grade one. Mm-hmm. This is nothing new for Elon Musk. He has a lot of history with securing billions of dollars in back commitments. Some of them have gone pretty well, some of them not, looking at the 2022 buyout of Twitter, but definitely a very interesting one. Nevertheless, great week for SpaceX. It's ending the week 30% above the $135 price.
It's going to be fine.
Historically, they're going to be fine.
You do have to imagine, though, or wonder if the news about potentially the company taking on, more debt, is that weighing on the stock? But $20 billion, compared to the market cap, I think they'll be okay. What are you looking at next, Denitsa?
One company that is up today, Intel, soaring. It's both Intel and Apple news. Intel ticker is INTC. The stock jumped about 10%. Wow. It's coming off tweets from the White House. U.S. President Donald Trump posted that the chip maker would work with Apple to design and produce semiconductors domestically. Intel has been on a tear. It's obviously receiving a lot of support from DC, and that is helping. If you look at the stock year to date, it's up 260%. Wow. Today's reaction for Apple is pretty measured. It's up less than 1% compared to what we're seeing from Intel. Clearly, we see who's benefiting from this. We have previously reported that Apple has held exploratory discussion with Intel and Samsung. This is a big win for Intel. The whole comeback plan of Lip Bhutan has been about that chip production and finding those external customers. And what a better external customer than Apple. Clearly, we can see the reaction. And of course, for Apple, it's great because it relies on Taiwan Semiconductor, and there has been so many supply issues and stuff. Yeah. So it's great news for both companies.
I think this is a record for Intel, so definitely absolutely a great day for them. The stock is really just rip-roaring. And what else? What about Take-Two? I think you're looking at that too.
Yes, computer games to end the week. Take-Two shares rose 6%. Rockstar Games is starting pre-order for GTA 6.
Oh, something we're all so familiar with.
Yeah, I don't know.
Do you guys play video games?
Not at all. I spent my childhood playing GTA.
Really?
Okay, so for
dabbled. She's not sarcastic. Just you and me.
No, come on, guys. This is huge.
Yeah, but I just played Frogger and Mario.
Okay, that's it. I had to listen to the video game music growing up.
You keep go going, home, Jenny. You have a homework, play GTA. But the GTA is expected to be one of the biggest video games releases ever. The previous one that was out had sold 225 million copies without Emily and Isabel buying them. The stock is down 6% this year, and there have been quite a few delays, and that has definitely weighed on the stock. But now the launch date is November 19, and now that we have that pre-order date, it seems like investors are pretty confident and excited.
Okay, so are you going to pre-order?
I think so.
Wait, why don't you play anymore when you played when you were younger?
Because I spend a lot of time at this office.
In the cross-asset team.
She's focused.
Busy.
Exactly. Yeah. Denitsa Sakova, cross-asset reporter with Bloomberg News. Thank you for joining us on this Stocks on the Move. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Well, that's about gonna do it, Isabel Lee.
I think we have 60 seconds left, so should we savor this moment?
Yeah, I think we should. This has been a lot of fun. We're actually going to head to Carol Massar and Tim Stenovic very soon. They are in Las Vegas.
I know, we were just talking about how they always travel, and it must be fun, but also tiring. But you're going to be in the best hands because this is their show. Carol Massar and Tim Stenovic will be in Las Vegas. We just held the fort for them here in the New York studio for around an hour. But it's been an interesting day in markets. Stocks climbing, oil dropping. Gauge of chip makers hitting records, oil sliding to $75 per
And
barrel.
the SpaceX news, now that I'm a credit not an investor, credit reporter. I was getting a
You can be
little
an
bit of
investor.
FOMO. And now we get to talk about SpaceX in the bond market world, potentially if they sell those IG bonds. For those of you watching on TV, next up is The Close. Bloomberg Businessweek continues on radio, YouTube, and originals. Carol Masser and Tim Stenovic are taking the reins.